What's up, everybody? Thanks for joining me on these analysis. We're going to be looking at MSTR and Bitcoin. We're going to be talking about taking profits and different ideas of how you can do it. Remember, there's no right or wrong way to take profits. Some people like to take half at a time. Some people like to sell the entire thing. Some people like to do quarters and slowly trim off. That's kind of how I like to do it. I like to trim little by little so I still have exposure. That helps, at least for me, it helps me not have that FOMO. You don't have that FOMO feeling. You still have skin in the game, but you're also taking profits and sitting on a little bit of cash just in case you end up getting some kind of dip or pullback that's unexpected. And now you have that cash on hand to deploy at a pretty solid price. And then you can ride that up and continue that momentum. So you can kind of implement that along with a DCA strategy, and I feel like you can be pretty safe for the most part. So we'll be talking about a couple of different ways that you can take profits in case anybody on here is interested and they don't have a strategy. This is for you. If you don't have that strategy or you're looking for an idea of how to do it, then this possibly could work for you. Of course, you don't have to take this, but yeah, you could implement this into your strategy. So with the first one we're going to be taking, we'll be looking at the 20-week SMA. So we'll take it from the breakout point. So I'm going to have two different versions of this, of us potentially reaching this midline, at least on Bitcoin, and that being the potential top. So when we take a look here on Bitcoin, potential top being somewhere on this line. So that's going to be the more bearish outlook. And then I'm going to have the more bullish outlook that everybody wants to see, of course. And I'll have, ideas for both of them. We're going to go from the 20-week SMA, depending on if you want to slowly get out of the position or if you just want to trim once. You don't have to trim the entire position. You can trim twice or you can trim 4 times, but do 5% each time. It all depends on you, what your financial goals are. If you're trying to retire, are you just trying to build? Are you going to hold this for another 10 years? It all depends on that. So there's no right way. For instance, let's say the first target we're looking at, we just take a percentage at 50% off of the 20-week SMA. That means you'd be taking a little bit off at 490. Let's say we moved up another, for instance, 30%, and we're sitting at about 80, and you take another percentage right there. So for instance, let's say we're taking 15% each time. So you take 15 off the first one, you could take 15 here, and then you make it to 110. Maybe you take 15 there. And then this is for, like I said, that idea that we could potentially hit this and then go sideways or downward. And then that would allow you to have that opportunity to DCA in. So for instance, if that were to actually happen, let's say we're looking at this leg here and we push up to that region that we just marked. So if this was the leg, we push up here and we find that bounce there and support. Maybe you land at the golden zone and you pull back to 530 to about 500, and you can take that cash that you trimmed off and reaccumulate. But if it continues to ride up, you're still not mad because you only trimmed off 15 to 30% depending on what you did, or maybe you did nothing. So it's just an idea. That's for that first scenario where we're thinking Bitcoin could potentially hit this line here, the midline, reject downward, and that would be, some kind of temporary top before we either continue up or the cycle's over. Of course, we hope that's not the case, but we have to be ready for those scenarios. On the more bullish side, you could potentially go something like this where you start taking profits at 100%. So at 100%, so you're sitting at around 650, you say, all right, I'm going to take my first 15 to 20 or 15 to 25%. And then you could go 150 is your next 15 to 25%. and then 175 or 200, wherever you want to do it at, would be your next spot that you can trim off of. And if you don't hit it, at least you got, the first two out of 150 and 100. And potentially you could either be out of the position, or you could have downsized your position by half and you're sitting on cash just in case we do get that right translated cycle. And if we do, if this ends up getting very exponential, like we've seen in the past two legs, and we rally all the way up here, and then you get that pullback, you'll have money to DCA back into this, or lump sum if you feel confident that we're gonna continue that move. So if that were to happen, for instance, let's say we went up here and you land at that golden zone, it kind of lines up with the upward sloping trend line. So maybe you could hop in there where you see, okay, golden zone's coming up, we got a key level of support, we have this bottom of the trend line, which is a key level as well, to continue that trend upward. Maybe this is the spot for me to go in. If you believe it's the right translated cycle, you're looking at the Federal Reserve, the economy, you're seeing, hey man, unemployment's not really spiking, inflation's under control, things are looking good. Boom, here we go. I'm gonna hop in there. That's more so for the person who believes that this will happen again, where we have this flagpole here that measures out this move. This flagpole measured out this move, and you think that this flagpole here will call this move. So if you think that's going to happen, then you obviously believe that we should be hitting the top of this channel, just like we did here and just like we did here. Another idea that we could potentially have is, it's kind of the same concept, but you go from your last touch on the EMA for the daily, the 8 EMA right here. Let me zoom in a little bit. So you go from your last touch of the 8 EMA, and then you start to move up, and then you can do that same concept where it's like, okay, we start at 50, and you use the 8 EMA as a trailing stop loss. So essentially what you'll be doing is, okay, I'm at 50. I'm comfortable trimming whatever percentage you want to do, 10, 15, 20, 25%. I want to trim a little bit. Anytime we come back to that 8 EMA after this point, so anytime after 593, after we touch 593, even if we go straight down from 593 to that 8 EMA, you would trim that position. But then if we end up rallying up to, for instance, 70, and then the 8 EMA continues to follow, and then we pull back to 68, then we touch it, that's where you'll trim your first position, if that makes sense. You can do that continuously. So for instance, let's say you do the first one at 50 and then the next one at 75. Now you say, hey, anything after 75, now I'm ready to go. Then we push up to 100 or even higher, 105, and then we pull back to 100%. And that's where you come into contact with the EMA. That's where you'll take that profit for that portion that you're trimming. And you'll continuously do that. And I'll show you that on the last move here so you can kind of get the visual. So for instance, let's say we take it from this last touch here. If we ran up 50%, okay, so now we're at the point where anything that comes to touch this moving average, we take profit off of it. So we ran up to 73%, and then we ended up coming all the way back over here. That's where we take our first trim at. And then we do the same thing at 75. So 75, you're sitting right here is when you're gonna come into that plan, like, okay, anytime we touch. So then we run up to 105, and then we come into contact at it around 82%. Then you take it from there. And then for instance here, you do it at 100. Okay, so now we're sitting at 100. Anytime we come into contact with it, we'll trim again. We didn't touch it here. We continued pushing. We didn't come into contact with it. I mean, I guess if you wanted to count this one, then you would take profit there. But you went from 100 all the way to 159%. So you take profit there. Or if you want to do it off of this touch here, you could, if you're more technical. And you take profit at 193 for that portion of it. You guys let me know in the comment section if that kind of makes sense and if you like this idea. that's kind of where I'm looking at things. I think it's a pretty solid plan, because when you have a plan, it's a little bit easier to execute. When you have rules that you follow, it kind of takes the emotion out of it, because once you get emotional and things start ramping up, you kind of forget where you should be taking profit. And this one would be for, the more bullish version. You could go off of the weekly if you feel like, all right, I really want to maximize as much as possible. I'm willing to take a little bit more risk. Then you could potentially do something similar where we go from the last touch. And this is for the scenario where you think it's going to push up a lot higher. We'll go from 100 and we're like, all right, we're going to take profits anytime we touch the EMA from here. And you could either, if you end up running up another 100%, you probably end up taking profits anyways, or at the top of this channel. But for instance, if you were to come back down, then you would be taking profits here at 123. So you gained an additional 23% off of that move. So that's kind of how that one would work. Especially if you get an exponential move, you'd probably want to trim off more than what you were anticipating. Like for instance, if you were here and you're like, okay, I'm going to trim off 15 to 20%, but then, like I said, you end up doubling your move from that point on, you're probably going to want to trim. If you were going to do 25%, you're probably going to want to trim like 50%. Or if you're going to do 10%, you're probably going to want to trim like 20 or 25 here. So it's kind of my ideas there. But for instance, if that were to happen here, you'd go from here 100. All right, at 785, I'm going to start that game plan where anytime we touch the 8-week EMA, I'll take profits. And then you can kind of ride that out and see where you land. And if you get excited with where you're where price is potentially going to go, then you could end up taking profits earlier than touching the EMA. So you always have to think of that too. You follow your rule, but if you're in more profits than anticipated, there's nothing wrong with saying my rule is out the door. I'm just going to take what I have right here in front of me. There's nothing wrong with that. The rule is really just to keep you grounded, but if you end up getting way more than you're anticipating, then take advantage of it while you have the opportunity. But yeah, that was a pretty short, quick video. I wanted to discuss these ideas with you guys. Let me know what you think in the comment section, and let me know your thoughts and how you're going to take profits, and are you going to trim? Are you going to sell it all at once? Let me know in the comment section. Make sure you guys like and subscribe on these videos. It really helps with the algorithm. I appreciate all your support, and I'll see you guys in the next one.